Let me ask you something that might make your blood boil. 6 Wall Street bank chiefs just brought in a combined $258 million in pay for 2025. Jamie Dimon at JP Morgan, $43 million David Solomon at Goldman Sachs, $47 million Ted Pickett at Morgan Stanley, $45 million Jane Fraser at Citi, $42 million. Brian Moynihan at Bank of America, $41 million. And Charlie Scharf at Wells Fargo, $40 million. Every single one of them crossed the $40 million mark for the first time ever. Bloomberg actually ran a headline saying Wall Street is paying its CEOs like it's 2006 again. The internet did what the internet does. People lost their minds. But here's the thing, what if I told you these CEOs might actually be underpaid? I know how that sounds, stay with me. Before you click away, let's just do some basic math together. These 6 banks generated nearly $600 billion in combined revenue in 2025. That's not a typo. $600 billion, their combined profits rose 8% to a record high. JP Morgan alone pulled in around $185 billion in total revenue for the full year. So when you hear that Jamie Dimon made $43 million, that sounds like an absurd amount of money. And for a normal human being, it absolutely is. But as a percentage of the value he oversees, his pay represents roughly 0.02% of JP Morgan's revenue. Let me put that in terms that hit closer to home. If you ran a small business that brought in $1 million a year and you paid yourself on that same ratio, your salary would be about $200 not per month, but per year. Now here's where it gets really interesting. Let's compare these bank CEOs to the people they're often competing with for talent, hedge fund managers. In 2024, Izzy Englander of Millennium Management took home nearly $4 billion. Not million, billion. Ken Griffin at Citadel made $3.2 billion. Steve Cohen at .72 earned $3 billion. The top 25 hedge fund managers combined made over $30 billion in a single year. The minimum, the absolute floor, to make that top 25 list was $375 million. So David Solomon, the highest paid bank CEO in America at $47 million, would not even come close to qualifying for the hedge fund rich list. His entire annual pay is roughly what a mid-tier hedge fund manager earns in a couple of weeks. And here's what makes that comparison even more striking. These hedge fund managers are often managing a fraction of the assets, serving a fraction of the clients, and employing a fraction of the people that these bank CEOs oversee. Let's look at another comparison. Tech CEO Satya Nadella at Microsoft made $96.5 million in fiscal 2025, more than double what any bank CEO earned. Tim Cook at Apple took home about $74 million. Even Jensen Huang at NVIDIA, after his first raise in a decade, pulled in roughly $50 million. Now, Microsoft is an incredible company, but JP Morgan has more employees, more revenue, operates in more countries, faces more regulatory scrutiny, and arguably has a bigger impact on the day-to-day functioning of the global economy. Yet Dimon earns less than half of what Nadella takes home. If you believe that CEO pay should in some way reflect the complexity, scale, and systemic importance of the institution you're running, then the bank's CEOs are getting a relative discount. There's another thing most people don't understand about bank CEO compensation. When you hear $43 million, you probably picture someone getting a wire transfer for $43 million into their checking account. That's not how it works. Jamie Dimon's base salary is just $1.5 million. The rest comes in the form of stock awards tied to performance that vest over multiple years. For Ted Pickett at Morgan Stanley, 3/4 of his bonus is deferred over 3 years, and all of it is in equity. That means if Morgan Stanley's stock tanks, his pay tanks with it. Compare that to hedge fund managers who take their 2 and 20 fees in cash every single year, rain or shine. The bank CEOs have their wealth tied to the long-term performance of their institutions in a way that most of their critics don't realize. Here's some important historical context. After the 2008 financial crisis, bank CEO pay was slashed dramatically. The Financial Stability Board introduced new principles that forced banks to tie compensation to long-term performance and risk management. Pay structures shifted from cash bonuses to deferred stock, and clawback provisions were introduced. For years, bank CEO compensation was genuinely restrained. That era of restraint lasted the better part of 15 years. The fact that we're only now returning to 2006 level pay after nearly 2 decades of inflation and massive growth in the size and complexity of these institutions actually tells a different story. It supports the argument that these executives have been systematically underpaid relative to the value they create. And then there's the talent argument, which is the one that boards and compensation committees obsess over. The people who run these banks could, at almost any point leave and make significantly more money in private equity, at hedge funds, or by launching their own firms. The skills required to manage a $4 trillion balance sheet, navigate global regulatory environments across dozens of countries, manage hundreds of thousands of employees, and maintain the confidence of shareholders, governments, and the public, those skills are extraordinarily rare, and the market for those skills extends well beyond banking. When Goldman Sachs pays David Solomon $47 million, they're not just paying for what he did last year. They're paying to make sure he doesn't pick up the phone when Citadel or Apollo or Blackstone calls. Now, I want to be fair here. There is a strong case on the other side, and I don't want to pretend it doesn't exist. The most powerful counter-argument is that these banks benefit from an implicit government backstop. They're too big to fail. When things go well, the CEO gets paid, and when things go catastrophically wrong, taxpayers have historically been the ones holding the bag. That creates an asymmetry that arguably makes any pay figure too high, because the downside risk has been socialized. There's also the basic moral argument. When a CEO makes $43 million while the median American household earns about $75,000, the gap is difficult to justify in purely human terms, regardless of what the spreadsheets say. And consider this. Morgan Stanley cut 2,000 jobs in 2025 while citing AI automation. That same year, they boosted their CEO's pay by 32%, and that's a tough look no matter how you frame the numbers. But here's what I think the real question is, and it's not the one most people are asking. The question isn't, is $43 million too much money for one person? Of course it is, by any normal standard. The real question is this. Within the ecosystem these CEOs operate in, an ecosystem of hedge fund billionaires, tech tycoons, private equity titans, and sovereign wealth funds, are they actually being compensated at the level their responsibilities demand? And the uncomfortable answer, if you look at the data honestly, is probably not. The 6 highest paid bank CEOs in America, combined, made about $258 million in 2025 as the Englander. One single hedge fund manager made nearly $4 billion in 2024. That's roughly 15 times what all 6 bank CEOs earned. Put together, an Englander, brilliant as he is, isn't responsible for the plumbing of the global financial system. So yeah, are bank CEOs overpaid compared to you and me? Absolutely, are they overpaid compared to the people they're actually competing against for talent, the value they create for shareholders, and the systemic risk they manage? The evidence says otherwise. The reason this conversation matters isn't just about 6 rich guys and their paychecks. It's about how we think about value, about what we reward, and about who we're really angry at when we see these numbers. Because if you're upset about $258 million going to bank CEOs, wait until you find out what the hedge fund guys took home. That's all for this one. Let me know in the comments. Do you think bank CEOs are overpaid, underpaid, or paid exactly what they're worth? I genuinely want to hear your take. And if this video made you think even a little differently about CEO pay, hit that like button and subscribe. I'll see you in the next one.